Hello, and welcome to the February 4th Virtual Investor Conference, the second OTC Markets OTCQX Banks event. My name is Rachel Nussbaum with the OTC Markets Group. Before I introduce the next presentation, a few quick points. Please ask questions in the questions box below the slides. Questions will be answered as time allows at the end of the formal presentation. After the presentation and the question and answer session, don't log out, as you will automatically be transported to the Franklin Financial Services booth, where you can continue the conversation via the chat box and access additional investor materials. On a final note, all of today's presentations are recorded and are available for 24/7 replay at your convenience. At this point, I am very pleased to welcome Bill Snell, Chief Executive Officer, Tim Henry, President, and Mark Haller, Chief Financial Officer of Franklin Financial Services Corporation. Welcome, gentlemen.
Thank you and good morning. As Rachel mentioned, we have two other presenters this morning, Tim Henry, who joined us as President on Monday of this week, and Mark Haller, who is our CFO. My first slide that I'd like to talk about is our company profile. F&M Trust was founded in 1906. And our holding company, Franklin Financial, was formed in 1984. We're headquartered in Chambersburg, Pennsylvania, which is in south central Pennsylvania, just north of the Maryland line. We have 22 offices throughout Cumberland, Franklin, Fulton, and Huntington counties. We're just about $1 billion in assets as of year-end 2015. And we've had trust powers since 1906. So therefore, our trust department actually has over $700 million in brokerage and trust assets under management, which I think is a differentiating factor from many community banks. Our next slide just reflects our market share, 49% in Chambersburg, 31% in Franklin County. In Fulton County, almost 35%. And in Cumberland County, we're at 3.3%. Carlisle, which is in Cumberland County, at 5.2%. As I'll be talking later, Cumberland County is our future growth market. Our next slide just presents our trading area, and although Pennsylvania has an aging population, I think that our particular part of Pennsylvania represents a very vibrant economy. Interstate 81 cuts through Franklin and Cumberland counties. And to the north, we have the Pennsylvania Turnpike, which runs east and west, and to the south, Interstate 70, which runs east and west through Maryland. As you'll note on the slide, we have relatively low unemployment rates in our county. Matter of fact, Cumberland County historically ranks as the lowest unemployment rate in the state of Pennsylvania, with Franklin County following not too far behind. You also see a slide that kind of shows you the overall picture for the state of Pennsylvania. Next slide just talks a little bit about our growth market. Franklin County has a lot of manufacturers. They're doing a lot of exporting overseas. And again, Cumberland County is the fastest growing county in the state of Pennsylvania since 2010. Next slide is a picture of our management group. The following slide, I think, reflects the significant years of banking experience that the members of our team have and the diversity of background that they have brought to our company. So again, I think another differentiating factor is that we have a very strong and diversified management team. The next slide talks about our strategic plan focus, and I'm going to talk about each of these bullets in some detail. The first one is quality loan growth. And you'll notice on the slide, our focus is on Cumberland County. One of the reasons for that is in Franklin County, we really dominate the market from a commercial lending standpoint. And we see Cumberland as a huge potential market for us. Loan growth has been relatively flat in our area from 2012 to about 2014. However, around April of 2015, we saw a fairly significant pickup in commercial loan activity and opportunities. The other significant thing that we're focusing on is the amount of M&A activity that has occurred in our marketplace, which we think will create future opportunities. FNB out of Hermitage, Pennsylvania will be acquiring Metro Bank on February 12th. We anticipate the conversion will occur in the third quarter of this year. We do anticipate that there will be some significant changes. As some of you may know, Metro is known for its 7-day-a-week banking, which we've already heard is going out the window, and I think there will be relatively few directors of Metro Bank involved either in the FNB board or the advisory board that they're creating in the Harrisburg marketplace. Secondly, BB&T acquired Susquehanna Bank in the third quarter of 2015. The conversion, which took place later in the year, was the largest conversion ever undertaken by BB&T, and it is really, from our perspective, and I think from the marketplace perspective, has not gone smoothly. I would just add that many of the prospects that we have are actually calling us looking for a different banking situation. Finally, S&T Bancorp out of Indiana, Pennsylvania, acquired Integrity Bank shares of Camp Hill just about a year ago, and again, still sorting through that process. The next slide highlights what I talked about earlier. Year-end to year-end in 2015, we actually achieved a 9% growth rate in our commercial loans, and we are entering 2016 with a very strong pipeline of deals that will close in the first and second quarter. Next slide deals with our portfolio composition. You will see we have a fairly decent portfolio on the residential and home equity side. Turning now to the commercial portfolio, the first thing I would add is we have no oil and gas exposure at all within our portfolio. You would see our construction and development loans are less than 10% of our portfolio. We did have slight growth last year in this portfolio, and I would say that we have been very selective over the years, and even in the 2008-2012 timeframe, we certainly had developers who had problems, but we did not experience the significant level of problems that many other banks in our marketplace did. You'll also note we're showing some modest growth in C&I, and also in the municipal area, we've had some significant opportunities of late. Next, I'm going to address increasing our fee-based lines of business, and I'm going to skip over the very first one, which is investment and trust services, because I have a couple slides I will share with you later. The next one is cash management services, and I would just ask you to take a look at the advertisement that we have highlighted on this slide. This particular company is pretty well known. Martin's Famous Pastry makes potato rolls that are distributed from New York to Florida. They're a company that has a sales volume in the mid-9 figures, and they chose F&M Trust for their complete cash management services, not only because of the quality of our service, but because of the quality of our product. We feel that we have significant opportunity to raise our prices in our cash management service schedule. However, we have specifically delayed that because of the disruption that is occurring in our marketplace. So that is something that we're going to be looking at later in 2016. Merchant card services is a relatively new service for us. We brought on board an individual who took one community bank from $18,000 a year to $350,000 a year in fee income, and we last year started down that road. We did hit about $50,000 in revenue last year, and we anticipate that that will probably double in 2016. Another key focus was debit card overdraft opt-in, and through our branch network, we were able to increase the number of customers who are opting in to what we call courtesy coverage. We achieved a 33% increase in our fee income in 2015, which took us to $1.3 million in fee revenue in 2016. Another initiative that we looked at and moved forward with is Start Fresh Banking. This service is basically focused on the unbanked, and it's a way of generating fee income and debit card income. We were surprised to learn that we have a very large population of Eastern Europeans in our counties who are not tied into a bank. They're basically unbanked at this point, as well as a significant migrant working population because of the presence of the apple industry and apple orchards within our trading area. So again, that was a new initiative we started off last year. We did generate about $65,000 worth of revenue, and we anticipate that growing perhaps to $300,000 over the next couple years. Now I'm going to talk about our investment and trust services department. We've had, again, trust powers since our incorporation in 1906. We offer fully integrated trust, investment, insurance, and brokerage services. And by that, I mean that we have integrated brokerage with trust. Most of our trust relationship managers are licensed to sell mutual funds, annuities, life and health insurance. And that enables them effectively to deal with the customer and to do what's best for the customer. Last year, our fee income increased by 10%, 10.1%, to over $5 million in revenue. We anticipate another very strong year in 2016. Organizationally, we designated 2 market managers in 2 different regions to focus on driving our growth, particularly in the West Shore region of Cumberland County. That essentially is the suburban Harrisburg market. A couple things that we really have going for us in that marketplace. Our competition is basically the big guys, PNC, Wells Fargo, M&T, and typically our fee schedule is 40 to 50% of what they charge. Secondly, we have 2 portfolio managers. We make our own investment decisions, and we have a great track record from a performance standpoint. Those investment portfolio managers actually go out with our relationship managers to talk with the customers, and we find there's nothing the customer likes better than to meet the individual who's making the decisions for my retirement account. And then finally, I think that I would say that because of the potential in Cumberland County, I think that we can double in size over the next couple years within our trust department. The next slide is simply a listing of some of the designations. We have a very experienced staff, over 300 years of combined financial services experience, many professional designations. I would also add another differentiating factor is we have an employee benefits function within our investment and trust services area. So we're able to wrap around our commercial customers, not just cash management, but employee benefit services as well as trust services. You can't drive loan growth and fee income growth without a good sales culture. I've been in banking for a long time, and I've probably experienced somewhere between 30 and 50 sales training presentations over my time in banking. About a year and a half ago, we came across a particular group, Anthony Cole Training Group, out of Cincinnati, Ohio, that had somewhat of a very different approach. Basically, their approach is if you want a sales culture, hire salespeople and polish as needed. They present a very individualized approach to helping to develop your sales staff as opposed to what I refer to as a one-size-fits-all approach to sales training. So all of our relationship managers have gone through their sales skills assessment, and we also are now using that for our hiring process, which has completely transformed our hiring process. So needless to say, I think we're very pleased with what we've accomplished to date and the direction that we're headed. Our next slide deals with expense control. In late 2013, we completed a comprehensive delivery channel study that looked at all of our community offices as well as our self-service delivery channel with the objective of trying to increase penetration and profitability. As a result of this study, we closed 3 of our community offices in January 2015, resulting in a reduction of about $500,000 a year in occupancy expense as well as salary and wage expense. And I just highlighted at the bottom of the slide, our salary and benefits expense increased only $6,000 from 2014 to 2015, and we're talking about a $17.1 million payroll. Additionally, occupancy expense was down about $380,000. So we achieved what we set out to do. In 2016, we've also identified some additional positions, about a dozen or so, that we plan on eliminating primarily in our community offices as a result of lower transaction volume. So we anticipate continuing to manage expenses very tightly. The next slide, again, it's our trading area. I wanted to highlight the 3 offices in red in the lower left are the 3 offices that we consolidated. Also, as part of this study, we looked at integrating delivery channels and creating a branch of the future. Just wanted to highlight this is our version of the branch of the future in Waynesboro, Pennsylvania, which reopened back in August of last year. This branch was a 1970s contemporary branch, and I would just say that our customer base in Waynesboro has reacted very positively to the use of the teller pods, which you see on the left-hand side, as well as the Customer Learning Center, which has enabled us to really demonstrate our technology and help our customers feel more comfortable with that technology. We've also been successful in changing the behavior, the dress, and so forth of our staff, much along the lines of what you hear today about universal banker concept. We also focus in our strategic plan on board and management succession planning. We did have 2 directors retire from our board at the end of 2014, and we elected 2 new directors in 2015. One is Tricia Lacey, president of the Beistel Company, which is one of the world's largest party goods manufacturers, and Greg Duffy, who is a partner in a large insurance agency based in Waynesboro. Both of them joined our board in February 2015, and I would also say we maintain a constant pipeline of director candidates for future succession, and we update that pipeline every year. Also, we focused internally on my retirement and transition within the company, and delighted that we found Tim Henry, who has a lot of good background that we're going to transition over to Tim, and he's going to tell you a little bit about himself. Tim?
Good morning, everyone. Very pleased to be a part of Franklin Financial and F&M Trust as of Monday. During the hiring process, I spent a lot of time with the board, and we discussed my background and why I might be a good fit for the bank as we move into the next phase of growth. I wanted to share that with you this morning. I have been purposeful in building my career to lead to this position, and specifically I have experience in commercial and consumer lending, agricultural lending, commercial real estate lending, loan workout, branch management, retail leadership, investment and trust services, and private banking. I've held positions as a retail market leader, a senior lending officer, and also market CEO. I also have been able to demonstrate a history of involvement in the communities, where I have been chairman of both the Chamber of Commerce, several terms as chairman of the Economic Development Commission, United Way campaign, and chairman of the Boys and Girls Club, among other things. But obviously, we are a community bank, and we need involvement in the communities that we serve. Our focus going forward is to grow the bank both within our current markets as well as through well-thought-out mergers and acquisitions in the future. But prior to that, we're also going to need to work to bring the value of our shares up using ways such as the communications with you today to show where we have strength in our primary markets and great opportunities growing into what are some of the fastest growing counties here in Pennsylvania. Right now, I'd like to turn the next portion of the presentation over to Mark Haller, who's our CFO.
Thank you, Tim. One of our strategic initiatives was to improve loan quality, and the next few slides show a great improvement in our loan quality over the past 5 years. This current slide shows a substantial reduction in non-accrual loans from nearly 6% of assets, $36 million in 2012, down to less than 1% of assets, $5 million in 2015. I think of importance in that number is the fact that 4 loans comprise 82% of that total non-accrual loan number. The following slide shows our OREO portfolio alongside of our non-accrual loan portfolio. As you can see, our OREO number had been trending downward over the last 4 years. We took a slight jump in 2015 with the addition of a $3 million credit in the third quarter. However, similar to the non-accrual loan portfolio, 2 properties comprise 86% of the OREO portfolio. Those properties are both commercial real estate available for development in a desirable area, and both of those are getting serious attention as the economy is improving locally. This next slide shows a 5-year decline in our net charge-off number and a 4-year decline in our provision expense. I should mention that the slight increase in the 2015 provision expense was solely the result of portfolio growth in 2015. As Bill mentioned, we grew commercial loans by over 9% in 2015. The next slide shows a trend of our allowance of loan loss, and of interest, the significant decline in our specific allowance in 2015 barely makes the scale. And if you view the specific allowance as a predictor of future losses, then this is a good indicator of things to come for Franklin Financial. The following slide simply shows growth in our allowance coverage to our non-performing loans. And of course, as the allowance is being maintained and non-performers decline, you would expect to see an improvement in this ratio, which we have shown a strong improvement over the last 5 years. At this time, I'll return it back to Bill for some discussion on new product initiatives.
Thanks, Mark. I just have a slide here that highlights some of our new products, one of which is our Equity Advantage Card. It actually is a debit card, and it is linked to your home equity line of credit. When we rolled it out, we had a very strong response from the marketplace. People Pay is something that we rolled out at the end of 2015, and during 2016, we will be rolling out both Apple Pay and Samsung Pay, as well as EMV chip debit cards. Just moving on a little bit to investor relations, wanted to highlight that we have a dividend reinvestment and stock purchase plan, or DRIP, and we revised our DRIP in September of 2010 to make it more user-friendly, and actually we've had over $6 million of new stock as a result of investments in the DRIP since 2010. As you know, we're listed on the OTC QX. We started trading in October 2014. We were selected in 2015 as one of the best 50 performing companies, and our involvement with the OTC QX has increased our trading volume. Finally, we have activated an investor outreach program, including today, and it will also include some in-person presentations as well as shareholder communications. One thing that we have highlighted on this slide is an interview with me by the OTC QX, and you can find that in our virtual booth. Now we're going to go back to Mark for a little bit more on financial performance.
Thank you, Bill. The next 9 slides highlight our financial performance over the last 5 years. You may have seen this information before or have access to it. Therefore, I will just hit some of the high points. This current chart shows our deposit growth over the last 2 years. It shows that it has been strong at over 4% for the last 2 years, exceeding our peer group comparison. We've achieved this growth through our in-customer market base and also through the market disruption that Bill talked about. The following slide shows our cost of deposits, that it is low and is below our peer group. And the fact that we've had a low cost of deposits has helped us to maintain our margin at a stable level, while many banks have seen a decline in margin over the last several years. The following slide is simply a 5-year trend of our balance sheet highlights. I have nothing to speak of specifically on this slide. It's for your reference. This slide represents a 5-year trend in earnings from 2011 through 2015. You should note that we released earnings for 2015 of $10,204,000, a 21.4% increase over 2014. I'd also like to point out, as Bill mentioned, our strategic initiative to control non-interest expense. As you can see from this slide, we've done a good job of that over the last 5 years. In fact, non-interest expense has increased on average 2.4% over that 5-year period. As Bill mentioned previously, fee income and non-interest income is one of our strategic initiatives and is very important to us. This slide illustrates the level of fee income we earn to our average earning assets compared to peer group, and you can see for the past 5 years we have exceeded our peer group. We believe that is in part due to our strong performance in our investment and trust services function. The following slide reports some non-recurring events that we had in 2015. We did report 2 significant non-recurring events in 2015 which affected net income positively. This slide simply backs out those events. It takes us down to what we're calling an adjusted net income number for 2015. Backing these numbers out, we reported adjusted earnings of $9.4 million, which we are very happy to report would still be an 11.4% increase over the 2014 number, even without those non-recurring items. The final 3 slides are just some performance metrics for your review. I have no specific comments on those. You can see the trends have boded well for us. We continue to be well capitalized, but they are presented for your review and study at your leisure. So at this point, I will turn it back to Bill for some concluding comments.
Thank you, Mark. That concludes our presentation. We're now going to take some questions from the floor. The first question is, any guidance on dividend payments for 2016? I will just comment that our board reviews the adequacy of our dividend payout on a quarterly basis, and as you will note by looking at our figures, we're in the relatively low 30% payout ratio range currently. Next question, the drivers of the 10% increase in investment and trust services it certainly wasn't market valuations. It was a tough period in 2015 at the end of the year. We're continuing to expand our presence in Cumberland County successfully. We've added to staff, so really it comes from business development efforts. Next question, with your stock trading below tangible book value, what is your view on stock repurchases? Well, I think that we would consider stock repurchases. However, we are anticipating strong loan growth this year, and capital is still king from a regulatory standpoint. So it is something we haven't ruled out, but it's something we're not definitely focused on at this point in time. Given the sell-off in the stock market and your stock price and the current notable discount, I'm sorry, that's the same question. We just changed screens. You talked about future focus on potential M&A. What is your criteria when evaluating M&A? What is the maximum amount of dilution you would consider? I would just say that from a dilution standpoint, within a year, perhaps 18 months at the most, we would want to recover any dilution. We keep track of many potential acquisition targets within South Central Pennsylvania. We're not sure that we'll find one that is in a market directly adjacent to us, so we might very well jump over one or two counties down the road, but we're going to look for somebody that has a similar culture, similar marketplace, and good loan quality. What is our ownership structure given the recent capital raises? We have relatively low institutional investment, I would say, in the 1.5% to 2.5%, and we have a very diverse customer base, not only in Pennsylvania, but we've been picking up over the last couple years investors from out of state. Go ahead, Mark. You want to answer that?
I had a question is, what is your tangible book value? At December 31st, our tangible book value was about $23.93 a share. We trend about $2 a share below the book value to tangible book due to the goodwill that we have on our books.
Another question here. Are there any plans to enhance shareholder value since now the shares are below tangible book and that does not match the outstanding performance of the bank? Well, again, I think the investor relations initiative that we have undertaken, we're just in the beginning stages, should have a positive impact. And also, I think that as we continue to demonstrate to the marketplace that we are a performing bank, that I think that will eventually be recognized in the marketplace. Another question about our expected hiring for 2017. Again, historically, we have had a very lean staffing structure, and basically, I think that will continue into the future. I get a supply of red pens just prior to the budget, and maintain tough control, and I see Tim nodding his head. I think that's going to continue into the future. The only real hires, we want to make sure that service quality remains the same. We probably will look at our branch network again as customer transactions continue to decline, but also would anticipate in the specific markets, if we see an opportunity to hire a high-quality commercial relationship manager or a high-quality investment and trust services relationship manager, we will jump on that opportunity. We have about reached our time limit, and we will transition over to the booth and try and respond to some of your other questions.